And it's time to do 30 minutes of business. Welcome to Business Morning on Sunrise Daily. I'm Amy John Mekwa. We'll start from the global space as usual. Oil prices rose for second day after a larger than expected decline in U.S. crude oil stockpiles added to supply concerns stoked by the United States sanctions against Russia. That started earlier this week, and we saw price surging because of that. Now we see Brent this morning has hit $82. Been a while since we've had this level. Gain 0.4%, $82.33, and WTI is $80, yes, 36 cents. It also gains 0.4%. Prices rose after U.S. Energy Information Administration reported that domestic crude oil stocks fell for the 7th time in a row last year. And that's the largest or longest declining streak since July. Global oil supplies are expected to tighten in the months ahead as fresh U.S. sanctions on Russian oil producers and tankers have sent Moscow's top consumers, mostly China and India, looking for replacement for that. The latest round of sanctions could disrupt Russian oil supply and distribution significantly. And the International Energy Agency says that its monthly oil market report on Wednesday, this was part of the information that they shared. Now, latest report from OPEC shows that Nigeria's crude oil production for December 2024 remains steady at 1.49 million barrels per day. However, the Vice Chairman of African Energy Council, Dr. Chinan Dikwa, raises concerns over low demand that's fueling lower prices as output increases. But I guess some of that has changed, even though we do not know how long that will last. We're already talking about the sanctions from the United States to Russia oil, which has sent price rising. This morning, we see Brent there at $82 plus. Let's look at the Naira now, how it fared yesterday. Depreciation was recorded on the NAFEX window, lost 1 Naira 43 kobo at the beginning of the trade. NFEM saw more demand also. That's this. So that lost 0.10% because there was high demand, especially at the beginning of it, to close at 1,549 Naira 20 kobo. NAFEX closed at 1,555 Naira. After it lost 0.09%. For the CBN window, we saw 1,550 Naira was the close. But I guess I have to say that on the parallel market yesterday, it crossed 1,600. And of course, the parallel market is where most Nigerians easily access FX. But these are the official windows, and these are the closing numbers for those different windows. Now, yesterday, headline inflation number came out, and thankfully, the MBS website is back and working. It's experienced, that's the numbers experienced increase, slight increase to 34.8% for the month of December. It's on festive demand, but as we would see, it's a marginal rise of 0.2%, because November it was 34.6%. So primarily, it was driven by demand for goods and services during the festive season, but not as much as economists had expected. Now, core inflation went up to 29.28% from 28.75%. However, food inflation rate declined, yes, surprisingly, to 39.84% from 39.93% in November. The rise in food was caused by increases in prices of tubers, alcohol, grains, and fish. So there we have inflation numbers declining at a slower pace. And in December also, of course, that is a major topic for Nigerians. And with the rebasing of both the CPI and the GDP, we'll see how that goes. Now, it's a season of economic forecast because we're still in January, so we've seen a whole lot of companies, setting out what they think the year would look like. Now, one company that has done that is ProShare. Yesterday, there was a meeting of stakeholders organized by ProShare as they shared what they think could happen this year. And their focus was on the $1 trillion economy, which is a proposal by the present administration. And they see that perhaps we're close to that, looking at outcome of the rebasing of the GDP and the CPI. The numbers are expected to be shared by the NBS at the end of this month. But they discuss some of their findings as we head towards that $1 trillion economy.
Gaps in the governance architecture able to deliver a capital markets support telecom. Personally, I am particularly keen to see such an engagement as we have today to identify the nexus between an area I consider very important, which is the household, something I consider to be the common denominator in an economy. That how does all these numbers help the household so that it can support consumption in the country and also be able to energize the stagnated retail investor space to create value in the economy. More importantly, I observe two issues I hope the panelists and the public will take up as well. In our explorative interpretation of possibilities, we had a lot of considerations to overcome, which we believe the MBS would consider, confront, and contend with. They, unlike us, have the responsibility to resolve these pain and flashpoints. That being said, our calculations relied on publicly available historical GDP data and an interpretative understanding of the fixed base methodology in contrast to the chain-linked methodology of the National Bureau of Statistics. The outcome of the independent explorative rebasing calculations would suggest that Nigeria may come in at above 400 billion, or precisely about 490 billion, making it inch closer to a 1 trillion economy than was previously thought. We posted that achieving this goal would require an appointment of the required GDP growth rate, as Tosi and his team would also present. The targets they provide means that we can only deliver on those things if we re-strategize, repurpose, and refocus the domestic capital market.
So Nigeria's economy forecast and inflation, of course, is top on the list in the country. Now, let's have that conversation with Dumebi Oluwole. Dumebi Oluwole is a senior associate with financial derivatives company. Hi, Dumebi. Good morning. Yeah, so FDC missed it again.
What do you mean?
No, because FDC said inflation will hit 35,
yes.
But we see the number from MBS.
That's 4.8.
Yes.
But I mean, these things happen. It happens with forecasting, right? You won't always get it right all the time, especially when you consider the fact that we are using like things that are happening in Lagos State to try to forecast things that would happen nationwide. We're also using like obviously historical inflation, historical CPI numbers also forecast the trend. So, but the direction I think is what is more important to look at, and the month-on-month trend, which we were actually spot on with. The direction of inflation, it did rise again, maybe by not as much as we anticipated. But the important thing to note here is that in December, inflation actually rose, and I think one of the reasons why we didn't see as much of an uptick with what the NBS had with the actual inflation numbers as opposed to what FDC projected was 25.2, it's because we factored in to an extent a sharper rise in food prices. But to an extent, we did see that food prices were almost relatively the same going in from the end of November.
The demand was not as much as expected.
Well, they're not exactly. So it's because the huge shocks that we experienced in November going into December were not so prominent by the middle of December entering into the end of the year. And the Naira did actually appreciate as well in December.
Yeah, so one of the things stability in the value of the
exactly.
Naira.
So one thing to consider is actually the coalition period by the NBS. So the NBS typically would do their survey within the first 2 weeks of the month. So if you are forecasting with things that have happened almost maybe between the end of November, we're using and into the first week of the month, you might not be able to capture some other things that will be happening.
Because for December, we know that most of the activities towards the end.
Yes, towards the end of the period
until the new year.
Exactly. And to an extent, we didn't see that sharp rise in commodity prices. Petrol prices as well kind of slowed down at the end of the year. So those are some of the reasons why we're seeing like the increase in
not so much
of an increase.
So what happens with this rebasing? Because it's not just the GDP that is getting rebased now.
Yes,
the CPI is also getting rebased. I wonder how this will affect the numbers. I mean, if we're to be realistic, I want to believe it will be more. It will show more price increase because some new commodities will be captured into the basket.
Yeah, I mean, so a rebasing exercise typically supposed to happen every 5 years for GDP. For inflation, when you look at the IMF's consideration for actually rebasing exercises, a lot of times it should happen within that same period. But the reference period or the reference year typically would differ. So for the GDP aspect, we do expect that when you rebase the GDP, because you're coming closer to economic realities, the expectation would be that the numbers would actually increase, right? But because of the shocks that we saw, 2020, 2022, even 2023 going to 2024, we might not see a significant increase in nominal GDP numbers compared to what happened the last time we did a rebasing exercise. But following on with the CPI, was the last time we had any change to our CPI was in 2009, right? So we're looking at the new rebasing exercise that's about to happen. The new base year that the NBS is planning with is 2024. And what this means is that all of the
That's for the CPI.
That's for the CPI.
But for the GDP is 2019.
2019, yes. And what this means is that we will definitely see a significant decline in inflation numbers nominally. And the reason why that is because we're coming from a high shock period. I'm coming from a very high base. The average inflation in 2024 was 33.3%. And if you coincide that with where we are right now, we're not having any reforms going on right now. Petrol prices are somewhat stable, diesel prices are somewhat stable,
the value of the
Naira is somewhat stable. What this means is that on a nominal level, inflation is going to significantly decline.
But would that capture the reality?
So that's where I'm going. So what
because
this now means
we have
is
this
that
issue with unemployment since the new methodology was employed.
And you're very spot on with that. So that's where I'm going, because what this rebasing exercise will now mean is that even though we have a more robust consumer basket, we will not begin to start seeing all of these items show forth in inflation numbers until maybe 2026 going to 2027, because we're starting from a very high base and we will not yet be able to factor in the impact of all of these new commodities and new reconstituted inflation basket. We will not start seeing the impact of that on the nominal inflation number. Now, on terms of policy side and what this means for stakeholders, what this basically means is that we will start to see inflation numbers be very far from the reality of consumers and from businesses, right? So, and what this also means is that it will definitely have an impact for strategic planning for investors and business owners, because now you're seeing inflation numbers that are probably going to hover around 20 to even to an extent, to be very fair, 15 to 20%. You're going to see inflation numbers hovering around that. Meanwhile, your cost of operations are still very high. Your cost of operations are still very, very high. The other thing to also consider here is when you look at the rebasing exercise, one of the things that's also changing is items in the inflation basket. So that number has reduced from 50 to 40. From 51% really to 40. And what that now means is that the contribution of food items to general inflation might also decline. Now, even though there are other items that we see the NBS putting adding into this weighting exercise, for instance, restaurants and stuff, we also need to consider the fact that the average Nigerian, right, still earns below or still spends below $2 per day. And what this means is that you have about 60% of the population that most likely are not going to restaurants to buy food to eat on a regular basis. And so that gives somewhat, it will definitely kind of skew the inflation numbers. But I think the more important thing here is just to kind of see how all of this will play out, because we're all watching and waiting to see what the new inflation numbers will be. The hope is that we will not have a case of what's happening with the unemployment numbers, with the inflation numbers, where that trust deficit between the actual numbers and the reality will become too stark that we're not able to
well, we hope so. But you know, the thing is, at least we have the example of the unemployment numbers data, you know, to talk about. Unemployment is about 4%. And who do you tell that in Nigeria that unemployment is at 4%?
Yes.
And about 96% of Nigerians are employed. You know, it just doesn't capture the reality. So if we start seeing that with inflation number, then, you know, we're talking of bridging the gap between the government and the governed, you know, reducing the lack of trust. I mean, that's just unfortunately going to increase that. But as you said, wait and see. I think it's the 31st that they said they will release it. So hopefully,
we get to see what those numbers are saying.
We'll see what those numbers and how real it is to the people. But thank you so much.
Thank you for
your time this morning.
You.
All right, let's take a break. When we come back, talking about the rebasing, preliminary data released by the National Bureau of Statistics shows that real estate is now the third biggest sector in Nigeria. It has surpassed oil and gas to become the third largest sector. We'll talk about that, what it means for players in that sector, and a whole lot more after this break. Just stay with us. So while we're talking about rebasing may not capture the reality when it comes to measuring inflation, some sectors are happy. The real estate is one of that. The sector expanded by 46.52% in nominal terms in the third quarter of 2024. And now the NBS says it has overtaken oil and gas to become the third largest sector in the country. Let's discuss this with a stakeholder in that sector, Dr. Oluwatosin Olatunjoye. He is the Chief Executive Officer of Xylux Group. Dr. Olatunjoye. I have this other name. Olatunjoye, thank you so much for joining us on the program this morning. So, I mean, when a lot of people hear real estate has overtaken oil and gas as the largest, what does it mean for you as a stakeholder in that sector?
All right, so you realize that as a stakeholder in that sector, we are happy to see that report because it means that real estate is growing. It means sustainability. So, and if we look at it in the country, when it comes to real estate, it's as if we are still scratching surface because we are not yet there. And not being there yet, we are already having some data that shows that the real estate sector is the third largest. So it means that it's a market that is booming. So as time goes on, it's going to be a market that, you know, a lot of people will make money from it. And in terms of appreciation, if you look at it, real estate has been the market that everyone in the country have been able to testify to it because it's only the markets that keep appreciating every time without depreciating. And okay, go ahead.
But it means, I mean, you stakeholders, you players in the industry are making more money.
Yes.
But we still have a large housing gap. We still have houses at least high cost.
Yes.
For a lot of Nigerians.
Because if you look at it, in 2023, the contribution of real estate to the GDP is about 5.58, the entire 2023. And in 2024, because of the reduction in the purchasing power of the economy, we're all thinking that probably the real estate sector will be low. But meanwhile, last year also, based on the third quarter report, we are still 5.43 in the GDP contribution. So what that means is that a lot of people are interested in buying real estate. But the challenges they are having is basically affordability and flexible payment plan and a long-term duration to pay. So if we can solve these 3 points, then the housing deficit that we have at the moment between 20 million to 28 million can be reduced. People need affordable housing. People need housing that they can easily pay for. And with a long
but
term.
doesn't the sustenance of that value, doesn't it just say it's because the assets or the houses are more expensive? It doesn't mean that more people have acquired houses. It just means that perhaps the assets are more expensive. So maybe some people can buy 3 houses, the cost of 3 houses, you can now use the same fund for 2 houses. So I mean, it's just because of the drop in the value of the Naira.
So if you look at the economy, we have the high, the medium, and the low.
Do we still have middle? Because it seems the middle is lost.
No, there is middle. Because the market that really need housing, the market making up this housing deficit we are talking about is between middle and low. The high ones can afford to buy houses for themselves. And the middle and low, if you look at the income they earn from their salary on a monthly basis, can they easily afford to pay for a particular house they want to own for themselves? No, because the kind of house that are available in the market are not affordable. So as a real estate developer in the industry in Nigeria, we need to start looking towards building some houses in some strategic location, because you cannot build house in Ikoyi or in Lekki Phase 1 and expect the value of the house to low. No, it is not possible. So we need to start setting up houses in some areas where people can easily afford it and be able to set up a good payment plan for them, and they pay for a long time.
Yeah, we've been having this conversation for a while. We know we should, for instance, being realistic here in Lagos, if you're talking about kind of an area, you'll be looking at maybe Ikorodu or Epe.
Yes.
But people were Badagry.
Yeah.
But when you connect that to where people actually work, where they have to travel every day, then you see that perhaps a lot of people will not be able to, because there's no easy linkage. So that's on the one hand.
Okay.
On the other hand, you have the payment plan. I'm sure you are an investor.
Yes.
You want to be sure that you're going to get your money back, not just your capital, but also your interest, your benefits, getting involved in that business. And where do we see that kind of plan? At the end of the day. And by the time you look at even the installment payments, in reality, an average Nigerian cannot afford it. That's the truth.
Okay, so taking it from the first point you said, in terms of the distance from where people come from to another. Let's look at London, United Kingdom, for instance. You realize that a lot of people travel from a long distance to get to where they are going, because there's a means of transportation that get them closer to their workplace as quick as possible. So this is where government intervention needs to come in. And the government are really trying to bring up some other means of transportation for people to move from one location to another. So if there are good infrastructure, if there are good rail system, and even water transportation that can easily take me from, if I'm living in Ikorodu, does not mean I should pass through the main road to get to Island. Do you know that if you go through the water from Ikorodu to Lekki Phase 1, you will just use like 10 to 15 minutes to get there? But what about the means, the investment in that regards that will make people to be able to get there on time? So we need government intervention to be able to come in also to put infrastructure that will make people to move from their affordable homes to wherever they are working, because it's not everybody that can afford to live on in Lekki Phase 1, Ikeja, Magodo, all those places. No. So I think that will solve the first point that you're talking about.
Then the other point, the payment plan. So
the payment plan, in that regards, we need, yes, people need to have a long payment plan, because there was a time I did a study. At Zelos Group International, we have research departments that we make sure that we do research on a daily basis. So we realize that it's not that people don't want to buy houses, but they need an house that will give them easy payment plan that will fit into their income. So if you have a 10 years mortgage, that what you need to be paying on a monthly basis is maybe 200,000 naira on a monthly basis, and you're earning 500,000, you want to own a home. So our mortgage system also still needs to improve so that we can do more better.
Has your research looked at building materials? Because I know that's at the core of the expensive houses that we have. Perhaps if we had more locally produced raw materials, it could reduce the end price of this asset.
All right, so in the building materials, yes, you realize that we heard sometimes that some people use bamboo to do their decking. So is it, I want to believe that it is not all housing that you can use such method to build. So from my own research, it shows that we need to start looking towards cost efficiency, in the sense that most of the materials that take a lot of money from us as a developer are just 4 materials. The number 1 materials is the cement. Then we talk about the iron. Then we talk about diesel. Diesel is also part of it. then the finishing material. So we need to start bringing in investors that can locally produce all these materials and be able to get them at a cheap price. And getting them at a cheap price means that we're going to save the cost of importation.
All right, we hope that soon we will see that. And I believe investors like yourself should be able to move that. You know, let's start doing building materials locally
to achieve that.
All right, Dr. Oluwatosin Olatunjoye, District Executive Officer of Xylux Group, thank you for your time.
Yeah, thank you so much.
All right, so that's much we can take on this side of Sunrise Daily. Head back to the Sunrise Daily studio. Laddie Williams will be back at 1 p.m. You'll be here. I think he has a surprise for you, something new with the market. I'll leave that to him to unveil. All right, well, back to the Sunrise Daily studio. I'm Ini John Mekwa. Have a great day.